This is Chili's. This business, this is a classic ROM stock too, actually. This is a ROM stock too. It's a Buffett and a ROM stock and a Peter Lynch stock, actually. More Peter Lynch than Buffett, actually, because it's a restaurant. But Buffett's own restaurants, he owned McDonald's back in the day, right? So this has 133% return in the last year. That means it has momentum. And then the valuation is in the mid-teens. So it has value. It's not a lot of value, but it's got value. It's a lot cheaper than Cava. It's a lot cheaper than Chipotle Mexican Grill, right? Cava's up 26% in a year. Remember, this thing used to be nuts. I made fun of these stocks for a long time. These guys are in bear markets, right? Chipotle, this is Bill Ackman's Chipotle Mexican Grill, and it's still expensive, right? 40 times earnings, 44 trailing. It's too expensive. Valuation catches up. At some point, it catches up. The bear case for EAT is that the theme, its peer group, is in a bear market. So you have to bet that it bucks the trend, because that factor is going to weigh on it somewhat. At the same time, though, if you're a long-term investor that can compound and grow, that's interesting. So let me show you some stats again from our AI tool. Let me share my screen again. So this is how AI transforms investing, right? It would take a long time for an analyst to generate this report. It's a very thoughtful report with no comma misplaced, with the right perspective. It doesn't work like that. But anyway, revenue's up 14% year over year. That's great. It's beating inflation by a lot. That's great. I want to see that. I like businesses that can at least have revenue that beats inflation. Their margins grew in a backdrop where you have some inflationary pressures. That's good. Same store sales growth. This is the big one. 31%. Same store sales growth. That's big. They had a turnaround. It's working. We're winning market share because we're more top of mind. I wonder if that relates to immigration anyway. Does that relate to me? Is there a Hispanic bet here? So here's their peer group. These are restaurants. Restaurants actually are quality compounders if they can grow, if they can open new franchise. If you invest in a new restaurant and the same store sales growth is positive, and you get a payback within 1 to 2 years, and you can keep doing that again and again, that is a compounder.